The 2023 banking crisis is going to set off the next Bitcoin bull market. Not only has Bitcoin broken back above its $25,000 mark, but we're starting to see really important developments in the institutional and foreign crypto exchange markets, signaling the strength of the underlying ledger. Not only has Hong Kong enabled a massive pro-crypto policy, but they've also allowed different companies to move into the state, enabling for massive expansion into Asia. Coinbase has followed suit with its idea of opening up local bank transfers for Singapore users at literally no cost. All of this news is combining to create an extremely attractive opportunity in the crypto space, which seemed like a dead end over the past few months. How is this going to translate into value creation for Bitcoin, the crypto markets, and even Coinbase stock? Those questions are exactly what I want to address in this video. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to start things off, let's look at Bitcoin's chart, which we haven't covered on this channel for quite a while. As you all know, 2022 was a difficult time. There's no question about that. Stocks like Coinbase are obviously going to be down over 70 to 80% from their all-time highs if something like Bitcoin is down so much. But as I've said countless times, that is just a part of the process of being a crypto-related investor. Your job is to buy during times when there's excessive fear, like we're seeing right now, to make sure you build enough wealth and take the rewards on the next up cycle. Right now, Bitcoin is coming down from a very aggressive uptrend, but as you can clearly see from the size of the candles, the downtrend has been exhausted. Every single time that we've had this bear market rally has always been followed by big red candles to the downside that are showing us strength of the sellers. But all of a sudden, over the past few months, you can clearly see that through this consolidation period, we have seen less and less red candles. This is a very basic theory of price action, which can be used for performing technical analysis to understand where price can head in the future. And believe it or not, what has just happened is that we've broken above this 25K threshold for the first time in almost 5 months. The reason why this is important is because not only are we breaking above this blue 50-day moving average, but this is also going to be the first time that Bitcoin on its own is putting in its first new high. Every single time in the past Bitcoin has rallied, it has failed to put in a new local high. But this time, it is actually breaking out to the upside. This is something that is very reminiscent of what's going on in 2017 and 2019, right before the following bull market cycles. You can see that play out right here after we broke above this $10,000 level, and also when we broke above 12,000. Now, don't get me wrong, this isn't a prediction of what Bitcoin's going to do because I have absolutely no idea. But all I can do is look at the price action and how it has historically performed. And as you can see with the recent data from 2012, 2016, and 2020, we are sitting right now in the very middle of prior bear markets. The average drawdown has been around 70 to 84%. And as of the filming of this video, the maximum drawdown of Bitcoin ended up around 77% for this bear market. And as you can see, there was no coincidence in the time it took for Bitcoin to regain its all-time highs, which was around 1,177 days, which typically always happened in the halving cycle, which we expect obviously to be next year. Not only that, but also on the blockchain itself, the amount of value being transferred is still very high compared to where it was in 2020 and 2019 before the pandemic. As you can see in 2021, the Coinbase's transaction volume exceeded more than $1,600 billion. But guess what happened in 2022? What was the transaction volume that Coinbase pulled in one of the worst bear markets we've seen in crypto? The answer will probably surprise a lot of you. The actual number was around $850 billion. Yes, that's right. Even though Bitcoin is down 77%, Coinbase's transaction volume only went down to around 850, which is still more than 4 times where it was in 2020. Not only that, but the institutional involvement in crypto is also acting as a major tailwind for this industry. Fidelity, which is one of the biggest asset managers in the US, has just announced its new venture to allow Ether trading to most of its retail investor accounts. This is a really big deal because the Fidelity crypto platform was previously only available to their institutional and accredited clients. But now, for the first time, they're opening this up to their custodial and retail investment accounts. Either Fidelity knows that the upcoming Bitcoin and crypto bull market is starting, or they understand the overall industry is definitely headed in the right direction, and this might be the right time for them to add a new revenue stream to their business. And obviously, who can forget the absolute debacle we have seen happen in US banks? What happened with Silicon Valley Bank is a perfect example of why Bitcoin and decentralized cryptocurrencies are the future of the financial industry. No, Bitcoin is not going to solve every single problem that the banking industry has, but it will help with pushing the right narrative. And that is obviously the fact that the Federal Reserve's own actions can lead to both the upside and the downfall of the US banking system. When the Fed printed so much money in 2020 and bought so much toxic assets, they overinflated the money supply in the country, which led to the startup industry exploding. That is what led Silicon Valley Bank to increase its balance sheet and then end up buying treasuries, which obviously were attractive given the prospect of low interest rates. And then obviously when the Fed realizes that inflation is out of hand, they raise interest rates at an aggressive level that we have not seen in 40 plus years, which leads to the balance sheet values of these banks going down the gutter. People then rush out to take their assets from the company during a time when cash is king and companies are burning cash hand over fist, which leads to a bank run on the banks that held their assets with the Fed. And guess what? The average consumer and retail investor is the one that gets hurt the most from such a Fed debacle. Believe it or not, crypto and stablecoin technology is going to help us fight against this monopolistic system we have in the US financial system. Not only will solutions like Coinbase's wallet app allow companies and even businesses to run their own financial services without the regulation of a bank or a middleman, but inflationary forces will also be able to be managed at a much better pace. This is a big reason why I invest in Coinbase and why I'm optimistic about the current Bitcoin bear market coming to an end very soon. But as usual, guys, that is just my take on the situation. Nothing on this channel is financial advice. So let me know your thoughts down in the comment section below, and I'll catch you guys in the next one. Take care.